program today on cryptocurrency. I'm Mason Capitani. I am the 2022 CORFAC president. My company is L. Mason Capitani in Detroit. And just before I launch into our program, I just want to mention that looking forward to serving this year as president. Took the time to travel to Chicago to meet with Jonathan, Jennifer, and Diane, and we went through a whole host of things that we wanted to discuss so that we can lay out our agenda and our plans for this coming year. We've got a lot of great, exciting ideas that we're going to tackle, and there's going to be more to come on that in the coming days and weeks, and certainly as we all join together at our next conference in Las Vegas. But just want to say I'm very excited and looking forward to working with our staff and having a great and prosperous 2022. I also do want to mention at the urging of staff, please, if you have not registered for the conference in Las Vegas, or more importantly, or just as importantly, booked your hotel room, please do that, because we reserve a block of rooms that will only be held for a certain period of time. So if you haven't done that, please go ahead. Launching into our program today, which centers around cryptocurrencies. Cryptocurrencies such as Bitcoin and Ethereum are rapidly evolving, and soon a great deal of newfound wealth will be attempting to find legitimacy in established investment arenas, including commercial real estate. The following Zoom session will provide a high-level overview of the terms and tools the cryptocurrency community is using to organize real estate investments, what CRE professionals should expect going forward, blockchain's potential impacts on the title insurance industry, and more. Our presenter, Jake Castillo, is 42 years old, which puts him in the older demographic range for people enthusiastic about cryptocurrency. He got involved in 2011 when he purchased his first Bitcoin and annoyed his wife by setting up mining rings around the house. Since then, he has done application programming, crypto trading, and automated arbitrage. For a short time, he had a real estate sales agent license, and he has been involved in a few real estate investment deals along the way. He currently lives in Austin, Texas, where he works on a platform geared towards providing a liquid market for trading real estate investments. And with that, Jake, the floor is yours.
Thank you so much. I'm going to go ahead and get to the presentation. All right, can people let me know if that is being seen? We good?
Yep, we can see it.
Okay, good. All right, well, I'd like to thank everyone and welcome you here. Thank you for your time. I know that cryptocurrency is a topic that garners a lot of interest as well as a lot of skepticism. So I know that you come to these sessions to learn, and I hope that by the end of my session, you'll get to come away with some new information as well as a new perspective on cryptocurrency. So the only thing that I hope not to do is bore you. So if you leave mad, I'll still think that's all right. Okay, so just to give you an overview of what I'm going to be talking about, one thing is I want to go over my background and expertise to give you some inkling that I'm someone who's worth listening to in this space. The point of this talk is not to discuss anything technical, even though I am a technical person. Instead of talking about technical things, we're going to be talking more about philosophy and some of the tools that are presenting themselves and some of the things that are already occurring in the real estate industry when it comes to cryptocurrency. I want to try to talk about why crypto is attempting in some circles to leave the realm of speculation and start engaging in more mainstream financial activities like real estate. Sorry. Okay, so this is me. I've included a big picture of myself in case you couldn't see it before. Bitcoin was the first cryptocurrency that was launched in 2009. I got involved in cryptocurrency in 2011, so you can say that I've been working in this space longer than most people. So despite my being in the blockchain space and in the crypto space, and those two words I'm going to use interchangeably, I'm actually a pretty conservative investor. I tend to make long-term investments, and I just happen to have a keen interest in alternative currencies and the theory of money in general. So that's pretty much what drew me into cryptocurrency. I will say, for interest's sake, a majority of my best investments in cryptocurrency have been made out of spite. So the entire reason that I got into Bitcoin in the first place was I saw a video on it, and the person talking about it, I just thought he sounded like an idiot. There is no way that this thing could be real. This is no way this is true. So I decided to spend my time proving that he didn't know what he was talking about. And instead, I researched it and found out that there was a lot more to it than what he said. Okay, so I think it's important to say that I am 42, and that that makes me a young Zennial. And I mentioned this because demographics are really going to matter, and I'm hopefully going to show you an eye-opening slide coming up where you can see that it really it matters to people like me and people younger than me, and it really, there is quite a difference in interest when it comes to the age gap. And then also I wanted to mention that, for full disclosure, I am the president of a company called Cryptex Management. I'm currently in the middle of developing a platform. Our purpose is to draw in crypto wealth and do real estate investment. So I do have skin in the game, and you know, take what I say for what it's worth. I am definitely biased. The crypto space is one that is incredibly biased. If you ever get involved in anything individually in crypto, you will find that a lot of the arguments start becoming a matter of religion, where you have zealots proclaiming the goodness of their particular crypto and not others. It isn't a very friendly space, but I'm hoping that cooler heads will eventually prevail and something good will come out of it. Okay, so I did want to start out by touching on the current real estate needs of the crypto industry, and I do want to say that it's honestly not all that interesting. There's very little that can be done. Mining is probably the biggest industry when it comes to cryptocurrency. Mining, all they care about is access to cheap power and a warehouse. So everything is, mining is an incredibly OpEx heavy industry. And this means electricity. It also means cooling for the machines that they're running. So if you have a place in Maine that's a warehouse that has access to a hydro dam and they don't have to pay much for electricity, that's basically all miners care about. There are some outside opportunities, including ground leases for flare gas capture. That's another thing that seems to be cropping up in Texas. It's a very difficult thing to do, specifically because Texas is a harsh environment for computers, and it gets more harsh when you're talking about going out to mining rigs. So it's kind of a niche spot, not too much business to be done there. When it comes to specialized mining, there are certain types of coins that they're doing file storage, or maybe there's some proof of work blockchain that has very large data needs, and it actually pays to get your data out faster. So maybe having access to a spine. Again, this is not something you're going to run across very often, but it can happen. As far as everyone else is concerned in the crypto industry, we're just software programmers. So all we really need is office space. And that's kind of it for the crypto industry and our needs for real estate. And like I said, I don't feel it's too interesting. You guys may have a different view on it, but what I really wanted to talk about and focus on is the crypto asset space. And this is using cryptocurrency to purchase and track real estate. And this may change how you're doing your day-to-day operations, and also your customers who come to you that may ask you for special things, and you might need to know what that is. Okay, There are some crypto projects in real estate that are currently available. One of them is called Milo. They already deal in mortgages, but the president was shocked that people would take on the tax burden of selling their cryptocurrency for a down payment on their house when they could just borrow against their cryptocurrency. Borrowing against assets is something that's been going on for a long time. Cryptocurrency is, of course, a very volatile asset, so borrowing against it is usually requires a lot more paperwork and care. But it's something where there's a lot of wealth in it, so why not borrow against it? And again, it's about avoiding the tax penalty of selling your cryptocurrency. So if you can borrow against it instead, why not? There's a company called Contra Coin. This offering is a bit more convoluted, and their play is to kind of get real estate to get trapped in their network where people buy things with their own minted Contra Coin. It's a really, really ambitious play if they can get it off the ground. Realty is about making fractional investment in real estate easy. They lock real estate into LLCs. They typically deal in residential, and they use the blockchain as a marketplace so they can buy and sell tokenized shares of these LLCs. So they're basically using the blockchain as a marketplace, not necessarily as a funding mechanism. So and for us at Cryptex Management, our philosophy is about noticing that there's wealth amassed in crypto and that it should possibly move into other diversified locations, including real estate. So this is the statistics and demographics slide. And I will say that what we see is an opportunity to address this wealth holding demographic. So this wealth holding demographic that I'm talking about specifically is millennial millionaires. So in 2021, there was a survey taken that showed that 83% of millennial millionaires owned some cryptocurrency. And this isn't just cursory holdings. 53% of millennial millionaires had over half of their wealth in cryptocurrency. And this is actually a sea change from 2019. This 620,000 millionaire millennials was basically the last stat that I could find from something. And at that time, most of them had their wealth in real estate. And now most people have their wealth in cryptocurrency. So over 2 years, this change has happened. So I think that there is a good play to draw people back into the real estate market. It was something that they were doing before, they know about it. But the other thing about it is that the total market cap of cryptocurrency from 2019, in 2019, the market cap peaked at $300 billion. The total market cap of cryptocurrency right now is $1.7 trillion. So the amount of wealth that has been generated through cryptocurrencies has created a lot of millionaires. So this 620 millionaires, back of the napkin calculations, there are well over 1 million of us now. The other thing that you should look at is does cryptocurrency have the liquidity to handle real estate transactions? The answer is a definite yes. So last year, there were $400 billion in commercial real estate transactions that happened in the year. Every day, there are $70 billion worth of crypto transactions that happen. And I will talk about stable value coins in a little bit, but there's $150 billion worth of stable value coins floating around the market right now. There is enough liquidity, there's enough capacity to handle real estate transactions in cryptocurrency. That was actually kind of a big deal. It's a point where cryptocurrency can start being taken seriously now. Before, there just wasn't enough of it in order to make viable moves in real markets. Okay, so let's take a step back and look at what cryptocurrency is in general. So I am going to ask you to be patient with me and open because I know that not everybody agrees with my view on cryptocurrency. Yeah, a lot of the trouble that people have with cryptocurrency and judging its value is they look at one aspect of it and they treat it like that aspect exists on its own. But the point of cryptocurrency is that all aspects are always existing all at once, and the value of it really does need to be taken in a holistic view. So first off, blockchain and cryptocurrency, it's a marketplace. So the value of cryptocurrency is derived from that fact, and the markets are traded 24/7. Crypto token are assets. The tokens are assets, or as the IRS defines them, they're property. And they do have value, or they point to something that has value in the sense of tokens that are representing something else. And again, it's a marketplace. So these things are finding their value 24/7. And lastly, cryptocurrency is money. And I'm going to touch on this later, but the inside of this marketplace, there's a native currency that can be used to settle transactions. And there's a lot of value that can be derived from that. So I know that it's not always great for people that they don't want to think of cryptocurrency as money, but it really does help to look at it that way if you want to know why other people see value in it. Okay, general use cases for crypto. Even though I said that cryptocurrency is money, and even though lots of people will say that the purpose of cryptocurrency is to disrupt money and to replace money, I don't believe that's the case. I believe that the purpose of it is to replace banks and the banking system. So in order to do that, we have to look at what a bank does and what advantages it has and why we need banks. So primarily our use of banks is that we want to store our wealth and we want to transfer it safely. The other thing that banks provide is a source of lending, and that's another thing that the banks really do provide a service to the greater community by doing. So where crypto is attempting to attack the banking system is with the expenses. And I feel like the biggest expense with banks is that they don't really give you any returns. So one of the things that, people say, it's foolish to hold your money in cash because where are you going to put it that actually makes money? There are so many better places to put it. And the other thing about banks is I'm assuming that everybody has dealt with a bank where they were trying to do something perfectly legitimate and the bank was just being a pain and being cumbersome. And cryptocurrency tries to democratize that a bit. And so that's a key competitive advantage that it tries to leverage. So how is it doing this? Bitcoin, all these different cryptocurrencies have their different storylines and what they're trying to sell. Bitcoin's storyline is being entirely a store of value and a place for safe transmission, and their story really does end there. Ethereum started off with the story of being a world computer, but the value of the Ether, the underlying currency in Ethereum, has risen so much that it's now become relevant as a store of value as well. It floats other projects and it draws other efforts onto its platform. Just to give you, as an aside, being a world computer is basically saying that you can push logic to the cryptocurrency so that it will perform complex transactions. So Bitcoin will not perform complex transactions. They have purposefully made changes to it so that'll never happen. In my opinion, Bitcoin is boring. I got into cryptocurrency for Bitcoin and it was super exciting. And from someone my age, it's just boring. I'm not interested in it anymore. I don't know why it has the value it has anymore. But at the same time, I'm very willing to recognize that I can and will be wrong about things in the future. I just don't understand Bitcoin anymore because it really doesn't provide much. There are a lot of up-and-comers specifically attempting to attack Ethereum. You have Cardano, Hashgraph, Solana. They don't really have store of value because their blockchains aren't, the value stored in the blockchain isn't quite as big, but they do attempt to attack Ethereum on the sense that we can do more with less. And then you have a lot of specialty blockchains, things like Chainlink, the Graph. These, all they do is provide information to blockchains. Cosmos tries to link blockchains together. Sandbox is particularly focused on the metaverse. So these types of things, their utility has to be taken in their niche, and their value has to be looked at in their niche. I'm not too particularly interested in most of these blockchains for when it comes to interacting with real estate. there's a lot of work being done in Ethereum that I feel like is going to handle most of what's going to happen. And also most of the projects that I've seen come up, they are using Ethereum. Some of them do move over to one of the competitors, Cardano, Solana. But you know, sometimes that's a matter of attempting to get recognition and a little bit of notoriety. Yeah, so that is an opinion. Take it for what it's worth, but I do think that Ethereum is generally the center of the crypto universe as it stands right now. Okay, so time to get into more of the things that people hate to hear. It's time to think of crypto as money. People tend to think that money is a simple thing, and they're very confident that they understand what it is. But money actually isn't simple at all. You can learn about it for years and you can still be surprised. And I know this because I live it. There's so many interesting, niche, fascinating things about money. And if you ever get to the feeling like, oh man, I really understand money, then I feel like you're just going to be deluding yourself. So let's talk about what money is to get kind of a level set playing field. So money isn't the dollar bill that I hold in my hand. Money is a tool that society uses to communicate value. And it's something that shadows trade to balance flows. So as a product moves one direction, money moves in the other direction, and then you have balance. And that's what money is supposed to do. It's supposed to create that balance. Money is also something that grows organically. And this is something that people don't like to hear because they think it comes from the government. They think that it's a top-down structure and only a few people wield outsized influence. But you really can't fight public sentiment. And most of the time, even the Fed is just attempting to react to what's going on in the markets, and that's public sentiment. And the best way to keep a monetary system healthy is to be a good steward of it. So it's not some top-down authoritarian control. Money is a very organic thing. Okay, all that said, I think I will be the first to admit that crypto is actually a very poor form of money. It is money, but it's a poor form of money. And I think this is best put by Ludwig von Mises in his Regression Theorem of monetary value. And the quote from him is, people today expect money to have a certain purchasing power tomorrow because of their memory of their purchasing power yesterday. So Regression Theorem of money is specifically talking about a time regression. So if you bought a hamburger for $10 today, you would expect that tomorrow you could go back to the same store and use that $10 to buy a hamburger. And you know that, and you're very confident in that because a month ago you could do it, and a year ago you could do it. So having that time regression gives us as people confidence. It's a very human psychological thing. And that also shows why cryptocurrency doesn't work very well as money. Because in our economy, a lot of what our money is used is to make promises, especially for larger transactions. You guys deal in real estate, you know this. You need to have your money worth something, worth the same amount that it was 60 days ago, because a lot of times these transactions take that long to get through. So because there is a stable supply of cryptocurrency in most cases, shadowing an unstable demand, crypto cannot have a stable value. And if it can't have a stable value, it can't be used to make promises. And if it can't be used to make promises, it has to be limited to very crude transactions. So I will say that that a lot of people in crypto tend to mock banks and the US financial system, specifically for its fractional reserve lending. And I want to say that fractional reserve lending is a very good thing for money stability, because when you lend in that manner, you're actually generating money. You're putting money into the supply in order to meet the demand for it. No one lends because they don't have a demand. They lend because there is a demand. And once that debt is paid off, the money supply shrinks because the demand is gone. And this actually is a really good tool to keep the US dollar in balance and stabilized. So that's something that there's some parts of the crypto industry that know this, and they're trying to do something similar to that. So let's move on to some of the tools cryptocurrency that are going to be important in the future. So DeFi stands for decentralized finance. So this is the industry of borrowing against crypto, and there's a lot of stuff that that caters to this already. One of the biggest products that come out of DeFi are stable value coins, and these are coins that are pegged to the US dollar. And here's a nice quote by me: even though it seems boring, stable value coins are very important. And you really do think of stable value coins as being something that's boring because it doesn't fluctuate. Everyone knows crypto is cool and fun because of you can make huge returns by doing dumb things. But if crypto does want to move into the realm of the promise economy, then they do need to have stable value. So so I talked a little bit about entering the economy of promises. You also need a large enough market capitalization to shadow real world trade. It doesn't do you much good to have $1 million in stable value coins. That's not going to do anything for any real financial transactions. But currently, there's $150 billion in stable value coins. So we're now reaching a point where stable value coins can actually work in the traditional industries, trade credit, real estate, things like that. Okay, so how do stable value coins work? Most of them are backed by assets. Things like Tether, USDC, GUSD, they're supposed to be backed by US dollars. Sometimes they're backed by gold, sometimes they're backed by commercial paper. But there's something that is redeemable. When you have your token and you want to trade it in, you should be able to redeem it for something. So that is kind of the first wave of stable value coins. The second wave of stable value coins are ones that are backed by debt. And this is the ones that are most similar to the banking industry. So the way this works is that you have to over collateralize a loan, and you do it all on the blockchain. So there's no bank that's telling you, no, you can't do this, or trying to figure things out. So basically, if I have $1 million in a cryptocurrency, I can put that $1 million into a smart contract that locks it up and then gives me, it mints half of that value, so $500,000. So I have the rights to pay off that loan and collect my collateral back. I have first rights to do that. And I have to monitor this loan, because if my assets drop below $130 or 130% threshold, then suddenly that loan is redeemable by other people. So now imagine that you're someone who's just a shark out in the waters, and you see, oh, this person has, I can now buy $1 million worth of Ethereum, and I only have to pay $700,000 for it. So this is basically what keeps these loans, the value of the loans stabilized and redeemable for something that's worth something. And that's why all this, the DAI can be minted. So why is it pegged to the US dollar? You have to peg it to something, and the US dollar is a very stable asset. It's being pegged to the US dollar partly by a very mature market with lots of automated arbitrage. So I attempted to perform my own arbitrage on DAI because it's free money. If you buy it for 98 cents and then it goes up to $1.01 and you sell it, that's free money because everything is supposed to go back to the mean of $1, and it will bounce inside a small range. So I set this up, and in an entire year, I got one trade and very, very, very little money. So the markets are actually very efficient already at keeping this debt-backed pegged currency stable. Okay, so is DeFi a scam? It seems like a scam because a lot of times DeFi is very incestuous. It's being used as leverage to purchase more cryptocurrency. So I take out a loan with my cryptocurrency, I buy more cryptocurrency. That doesn't seem right. It also provides liquidity for upstart coins. Once again, it's staying in the cryptocurrency market. The fact that it is being used to purchase cryptocurrency and it's staying in the cryptocurrency, that makes it seem like an enclosed system, and enclosed systems don't play well with the rest of the economy. So Another reason why DeFi might seem like a scam is because some of the asset-backed stablecoins have very questionable auditing. Tether in particular is it's the biggest stable value coin, and the auditing behind the assets behind it is very questionable. I personally don't hold any Tether. I would never do business in Tether, not until they get their stuff together. But I'm kind of in the minority when it comes to the crypto world. Lots of people deal in Tether. The other thing is that we're not really comfortable with the idea of minting money without social approval. Currency is a very social thing, and it comes with all the moral markings that kind of try to keep it in regulation. So we want something like a bank. We want something that's very authoritative to say that this minting of this money is okay. And you know, it's just something that people might have to get past. All right, so let's move on to NFTs. So NFTs are probably taking the lion's share of the cryptocurrency news cycle. So let's talk about NFTs and talk about what their uses could be. So the key thing about NFTs is the word fungible. NFT stands for non-fungible token. So fungibility is like 10 people come in and they each take $1 out of their wallet or their purse and they put it in the hat. And then they pass the hat around and everybody pulls $1 back out. You don't care what dollar you get. You don't care if it's the dollar that you had. Okay, well, let's say that you have, you wrote down a phone number on your dollar bill that you put in the hat, and that phone number is actually really important to you. You really needed to have that phone number in the future. Suddenly that dollar becomes non-fungible. It has a unique property, unique characteristic that means that it's not tradable for another dollar. So non-fungible tokens are there specifically to point to unique things. So an NFT is a simple legal contract, and it really describes ownership or rights or something. An NFT is ownable on the blockchain. It's an asset as defined by the IRS. It represents something unique. So even the NFT is unique, but it really doesn't gain its value from its just by being there. It's the fact that it encoded actually points to something. The other nice thing about it, obviously, everything is a market, so it's transferable, and you have a reverse lookup for the owner. So if you know what an NFT is, you can find a payable address for that owner. And that gives the NFT a little bit of power that I'm going to discuss a little bit later. Okay, so how are NFTs currently used? Right now, most of it is representing the ownership of digital assets. This is art right now and also moments in sports. So you may have seen that an NFT, you can own an NFT of LeBron James doing a dunk. I don't know if that necessarily makes sense to people. Doesn't really make sense to me. You can explain it to me later if you think it's great. But this is what they're being used for. Another thing that it's being used for is to confer rights to the NFT holder. So it might be a ticket for a concert and the ticket is good for a certain seat on a certain day. So the fact that it is unique in time, in space, and it confers those rights, then that's what basically the NFT represents that ticket. So there's a lot of assumptions that make this pairing work. One of them is that the pairing is somehow enforceable. So just like that concert, if you go to the concert and you show them like, yes, I prove to you I have this NFT, then you can get your seat. The other thing is that the quality of the thing that's paired to the NFT is as durable as the NFT. And an NFT is incredibly durable. It cannot change. This is where some things have a little bit of breakdown when it comes to NFTs, because the NFT has no idea about the current state of something. Say you have an NFT that represents the ownership of a ring and the ring was melted down. The NFT doesn't know that. So if you can make the assumption that the quality of the pairing is good, then the NFTs will work. Okay, are NFTs a scam? I'm not currently an advocate of NFTs as they are currently used. The enforcement of an NFT pairing is suspect. NFTs have to be taken in context. So one of the things that NFTs like to point to is something that's collectible. So things that are collectible like stamps or coins, they represent a moment in history. It doesn't have to do with the paper or the metal. It's about the moment in history and the fact that you own that moment in history. But the thing is, if you have a coin, no one needs any special instruction to know how to use it. An NFT lives on a blockchain. It's completely separate from the real world. So relying on that context makes it a little bit suspect. And then another thing is that NFTs are currently being sold at valuations that don't really make sense because people tend to mistake their own value as a place in the story. I purchased a Zach Duke baseball card because Zach Duke was my friend, and he ended up pitching for the Pittsburgh Pirates for a few seasons. And I bought his rookie card, and I bought the signature one, and I paid way too much for it because I mistook my own value as the place in the story. And now I still like holding and owning this card, but it's not worth what I mean. I could never trade what it's worth to me for kind of a monetary value. So this is not just a problem with NFTs, it's a problem with everything that's collectible. Okay, so what about a legitimate use of NFTs? So let's take some of the properties of NFTs and put it towards something like the ownership interest of a dividend yielding asset, like real estate. So a fractional ownership of real estate can be represented by an NFT. An NFT can actually state in the code, I am 65% ownership of this building. So what does that mean for the NFT holder, and what does that mean for real estate in general? So the NFT is provable, and also that NFT will produce a history in the blockchain and a cadence of dividends in US dollars. So because you have a reverse lookup for that NFT, you can pay the holder of the NFT. Now the NFT becomes very tradable as well. So you can trade the NFT away, and the person who is responsible for collecting rent and paying out the owners, all they have to do is look up the owner of the NFT and pay them. So not only is the marketability is increases for the building ownership because the NFT is tradable, but also the trade means something. If you own the NFT, that actually means something. Now, if that NFT is producing a cadence of dividends, you can start valuing the NFT in more traditional ways, like cap rate or discount rate. So this doesn't have to just be real estate, but if you actually have something that makes economic sense and is comparable to other things, suddenly you have something that's a lot more interesting. And being someone who has owned partial real estate in the past, I know that the marketability aspect of it is very attractive. Okay. So we're going to move on to the last tool that I want to talk about, and this is the Decentralized Autonomous Organization, or a DAO. So the way to think about a DAO is that it's like an LLC with a very restrictive operating agreement. Specifically, everyone votes on everything. It's more like a membership club than it is an LLC. However, it does have some aspects of an LLC that for legal purposes work well with that. So a DAO is a smart contract. So this means that this is not Bitcoin. It works on Ethereum, but it also works on other things like Cardano and Solana, any blockchain that utilizes smart contracts. It's a codified corporate governance agreement of members where every member votes on everything. The other thing that a DAO is a fundraising tool. So the DAO will hold crypto funds. That's one of the nice things about smart contracts and smart contract blockchains is that the smart contract can act as a first party citizen. It can hold funds just like anyone else, any human can. So the DAO gets paid to fund things, and then votes. The only way that the funds are then distributed is through votes. So people make a proposal, and then it goes out, and then people vote on it. And if the proposal passes, then those funds get transferred by code to the correct entity. So that's kind of the summary of a DAO. So let's look at what that means for real estate. So I said it's a lot like an LLC. So what does owning a real estate through an LLC look like? So you have a bunch of members, they provide cash, they form this LLC, and then typically you have a manager that executes on behalf of the LLC, typically through an operating agreement. The manager is allowed to use the LLC's funds to purchase the building. The LLC actually gets to hold title to the building if that's the way that the LLC is set up. So this is something that you should know pretty well. I'm assuming you've run across this a lot before. Okay, owning a real estate through a DAO is pretty similar. People fund the DAO. They vote on proposals. One of those proposals is we want to purchase this building for this much money. And then they hire an executor, which the executor could be one of the members, but the executor executes on behalf of the DAO. So it's the responsibility of the executor to convert between USD and crypto. So the executor would receive the crypto, convert it to USD, and then make the purchase of the real estate. Some of the nice things about a DAO is that it can hold these funds without a custodian. So you don't necessarily need a bank account. It will hold the funds for you. The DAO can be used to make cash calls. So it's a nice way to codify membership and how membership changes for various cash calls. So there's a lot of nice internal things for the members, and the fact that the member always gets to vote, they really do get to feel like they're part of the process. So it also, the DAO maintains a guaranteed fair ownership of everything. There's no hand waving, there's no going back, like no gentleman's agreements or anything like that. Everything has to happen in code. One of the big problems though, you can see here, who holds the title? So an LLC can hold the title, but a DAO is just sort of a crypto entity. So how does that work? So when you are dealing with someone who comes from a DAO, you need to be worried about the regulatory enforcement that's going to come about. First thing is that a DAO can't hold title. You need an entity that has an EIN. What's great about today's laws, especially in Wyoming, is that you can submit your DAO to Wyoming and they will give you an EIN. They will convert you to an LLC. So you can have a DAO and an LLC. So make sure that the person purchasing the property has the ability to hold title, that they do have an EIN. I know that brokers really love it when people waste their time. And they love it when they get to the end of the transaction, they found out, oh no, we can't actually operate on this. You may not have to deal with a bank, but you will have to deal with the title company. So the title company is going to make sure that the entity holding title has an EIN. The other thing is that they're going to make sure that the executor has an operating agreement with the LLC, because at this point they have an EIN. That operating agreement will need to be able to identify the members. They will need name and address. So AML KYC is something that's going to happen, and it doesn't happen naturally through blockchain. It doesn't happen in crypto. So yeah, when you're dealing with someone, make sure that they know everybody who they're dealing with, because the title company will stop the transaction and you will have, and this entity will have wasted your time. Okay, so what kind of things does a broker need to know? Yes, you ask your client, are you going to try to pay in crypto or what? No, there's no infrastructure for handling crypto. You talk to Chicago Title, they just think you're talking gibberish. You talk to most banks, they think you're talking gibberish. The buyer is going to need to bring USD to the table. Title companies can't do the jobs without the help of the banks, and neither of them want to deal in crypto. It's a non-starter at this point. So yeah, just lay it on the table. No, you bring cash to the table, not crypto. So are the funds held in stable value tokens? They had better be in stable value tokens. There have been crypto projects that have failed in the past because they raised money in Ether and then the price of Ether collapsed and they couldn't get done what they needed to get done. They need to be in stable value tokens. All the good intentions of the world won't help you to close if he doesn't have the value he used to. That's just sort of, yeah, there's no room to be nice. Just do it right. So what are the steps for a hired So if it's a DAO, there's a very prescriptive method. So they need to follow that prescriptive method. You need to know that the executor has access to the funds, and not so much, they may come to you saying, hey, this is the building we want to purchase. I want to bring it back to my DAO to get a vote on it. That can happen, but make sure you know where it is in the process, because it can very easily happen where the DAO votes the whole thing down and the executor doesn't have access to the funds anymore. So so if you're dealing with something like this, just make sure that you're upfront and forward and very aggressive about, like, yes, but do you have the money? Is it in a stable value? Okay, so this is blockchain going to disrupt the title company service or the brokerage services? In my opinion, this is a lot of big talk and hot air. So yeah, the power blockchain financial instrument that any financial instrument comes with a built-in marketplace. A lot of what I've been talking about is fractional ownership of real estate, and then the marketing of all this real estate, the value of this real estate behind the scenes. That happens without a broker. So that can seem like a kind of a scary thing. When are the brokers needed? There really isn't much market for crypto outside of fractional ownership. There really isn't a point to using crypto if it's not fractional ownership. As much like, if you anticipate that fractional ownership is going to take over the real estate market, then go ahead and worry. But if you think that fractional ownership is probably going to mostly be a sideline thing, I would say triple net leases are going to be the biggest thing that fractional real estate will go after, because you're going to have a DAO that has to vote on everything, and you really need a very simple investment vehicle in order to utilize a DAO and not drive yourself crazy. So brokers, know that the DAOs eventually are going to come to you and they need to sell the building that the DAO owns. Property will still change hands. Most of the time property will be owned by businesses, and they're not going to be interested. They're just going to pay in US dollars like normal. The biggest thing for you guys, I'm hoping that you'll take away from this, is that there's a lot of wealth that's untapped. And these are customers that I feel that can be sought. And there are reasons to tell people, you know what, like you have a lot of wealth in crypto and you got it really, really fast. How about you put it in something a little bit more stable that will give you a return for life, create a legacy? Real estate is something that is very close to home and legacy-like. So there's a lot that you can do to get out there and to market the fact that you can use crypto. And again, like Milo is doing for the tax purposes, there are ways that you can avoid the tax drain of selling off your crypto. You can borrow against it to purchase real estate. There's lots of innovative ways for people to use their newfound wealth to get into real estate. Okay, title company, similar thing. There's been a lot of talk for years in crypto about let's go after the insurance companies. And that's what a title company really is the insurance company for titles. So insurance has a lot of investigation and arbiter and lots of human needed decisions and judgment calls. Judgment calls aren't something that go well on the blockchain. And if you do have a blockchain solution, you will still need investigators, you'll still need arbiters. It's just that the settlement will happen on the blockchain instead of at a bank. So again, I feel like there's a lot of hot air going around about the disruption of blockchain for title companies. And yeah, it's difficult to keep it legal, and it's difficult to generate like the real nuts and bolts of the business, which is people. It's hard to replace that. Okay, well, that actually concludes my presentation, and very happy to take questions.
You can either just start talking or put something in the chat feature if you've got something to ask Jake.
Do you want me to stop the share so that the pictures come back up?
Sure.
Uh.
Thanks. Nothing?
Nothing from anybody?
I've got a question. So how many of these transactions have you seen or been aware of? Or how many real estate transactions have you seen or been aware of where they use cryptocurrency as you described?
Yeah, so most of the time, crypto transactions for real estate have been one-offs, and they specifically make news because they are not common. The thing that I am looking at is some of the other businesses, like Realty has something like $40 million worth of real estate under their umbrella of control. They're based in Detroit, and that's where most of the real estate is. Milo doesn't release information about that. It's a very, very new product. So a lot of this stuff is kind of up and coming, but at the same time, it is not common yet. Yeah, I feel like most of what it is about the opportunity moving forward, not necessarily what has occurred in the past.
Okay.
Quick question here in San Francisco. So from a landlord perspective or bank perspective, lenders, has there been any talk about carving out language that people can pay their rents on mortgages in crypto? Because with all that fluctuation, I would say as an underwriter, you got to be awfully nervous if somebody says, I'm going to continue to pay my rent in cryptocurrency. And that can change daily or monthly or, you know, up and down. So I would think that some underwriters for mortgages are going to be hesitant accepting cryptocurrency or letting landlords or borrowers accept cryptocurrency. Have you read anything on that or seen anything on that?
Yeah, that's a great question, and you kind of hit on a really good point as well. Is that when things occur in the real world and not in crypto land, I guess, they're going to happen in stable value coins. So if someone is going to, like, no one makes promises. Like, rent is a form of promise. It's a contract for paying for so many years a certain value. Nobody makes promises with crypto. The only thing that it is used for in the lending space is as collateral. But yeah, so I've not, there are always people who say, hey, I want to pay my rent in crypto, specifically because they just want to advance the cause of kind of the decentralized currency model. But it's not something that that anyone is seriously considering for like a general payment type thing. So if it does come to be that there is a general payment, it will be in a stable value currency.
And to follow up on that, so when you talk about stable value, you said that is secured. I remember the 2008 crisis when I think AIG secured a lot of insurance policies with assets they didn't have. Who monitors how these stable value currencies or the stable value coins, how are they actually being secured? How do we know if somebody says, listen, I've got 50 million in stable value coin, if somebody came to actually cash them, how do we know the money is going to be there?
That's actually a big question in the crypto community too. Tether in particular has shown that they've lied about their asset backing. And it's always one of those like, hey, we lied, but we're good now kind of thing. The auditing has been suspect for a lot of them. That's why I feel like the lending version of stable value coins is actually a more reasonable thing to do than the asset backing. But yeah, so there are like USDC in particular, I believe has a very good track record of being audited and passing their audits very well as far as the assets that they do hold behind the scenes. But that's only as good as the last audit, right? You know, they can build some trust, but yeah, I don't think that asset-backed stable value coins are the future. I think debt-backed stable value coins are, but that's an opinion of mine. So,
Hey, Jake, there's
Let
a
me-
question in the chat
Yes.
from our folks in Phoenix, and it's curious about how this transfers into different currencies.
There are a lot of 24/7. I'm hoping I'm answering your question correctly. There are a lot of 24/7 exchanges that are in lots of different countries. There are people who are aggressively arbitrage all these exchanges, and it actually keeps the value very, very similar. Lots of these countries will. I mean, it's almost like a dabbling into Forex. You can trade out for euro, you can trade out for you know, any number of currencies, whatever the renminbi. So in a way, the work on the cryptocurrency markets has actually increased Forex and some of the arbitrage that's going on, keeping some of the currency value stable.
Thank you.
Yeah, I think there's another.
What's that? There was a question about where do you learn more about this? Or how do you become
It's specific questions on Google, I suppose. Like, where you learn more about this, I don't want to toot my own horn too much, but like, I feel like you really are kind of learning from someone who knows more about this than most people. There really aren't too many. It's hard to dive into cryptocurrency without getting angry because people are very mean, and they're not forgiving, and you will be called stupid if you ask a question, and so yeah, I don't know, other than trying to Google, like, you know, cryptocurrency and real estate and just trying to dabble into who's doing what and find different things. You know, I find new companies all the time that I didn't know about before. So it's hard to find new stuff because it is a very nascent space.
I think that part of it is you have to have a platform. And I mean, the platform is what changes here. And I'll give the example of, you know, obviously, I mean, not obviously, but I've been dragged into cryptocurrency a long time ago, which was fine. But, you know, what I learned this year, for example, is because there is now a platform, is that all of my charitable giving has been with cryptocurrencies. Because there is now a platform, the one I work with is Given, that provides a very easy way to do it. And it gives you all the documentation and everything. And the true value of it is it's a property. So you're donating it at it's, you know, higher value, the gains, you're donating it. It's a much better way to donate, you know, similar to giving, you know, stock that has risen in price. But until this Given was available, you know, how do you do it? It was just too cumbersome.
Yeah, so there's a lot of work going on behind the scenes in order to make some of this stuff easier. Cryptocurrency by itself is dumb. It's just, you know, I take this and I trade it for this, and you know, here's this transaction, and providing meaning providing meaning behind that is what these software companies do. Sorry, I'm looking at the questions. Okay. Talking about tokenizing real estate. Sorry, Danny, I'm gonna go to your second question first. So tokenizing real estate, you are able in platforms like Ethereum, you're able to just generate tokens, and they can be tokens of any type. You can say, you can limit it to say like, I want 1,000 of these types of tokens, you name it yourself, and they just pop into an existence. And they don't mean anything unless you get them to mean something. So when you tokenize real estate, what you're doing is you're saying, you know, you have some contract, probably like a real legal contract in the background saying, here is this property, it's an LLC, and in the agreement, you say the shares are going to be represented by this particular token on the Ethereum blockchain. And then, and so all of the owners get their representative tokens. If it's a fungible token, then you divide it equally, like each share is the same as the others. If it's a non-fungible token, maybe you just give them one token that represents their full ownership. So these tokens, when they exist, then they can be traded to anybody else. And in cryptocurrency, there's something called an atomic swap, which is basically, I give you this and you give me this, and it's in the same transaction, so I can't steal from you. That's basically a way that you can divest yourself of your real estate holdings, is that you actually sell the token, which represents the ownership. Having ownership of the token, again, should grant you the rights to dividend payments, and the dividend payments can be made on the blockchain. Okay. Non-real estate question. What do you recommend as the best way to personally invest in crypto for growth? So I personally believe in owning the crypto, and partly because there have been a lot of ETFs that have come before the SEC and been denied. A lot of them have been denied because of Tether specifically. So so it's difficult to own custodial cryptocurrency. It can be a bit of a jump to get onto an exchange to purchase cryptocurrency. But my dad can do it, so you know, you could probably do it too.
What kind of comment was that?
Exactly. Yeah. So you know, a lot of times what cryptocurrency is attempting to sell you is a story. And it's very important to understand what the story is and the believability of that story. And then also know that cryptocurrency fluctuates wildly. And there are times when you'll be looking at it and it will be very overvalued. And there are times that you'll be looking at it, it'll be very undervalued. Steve, I'm sorry, this is probably not, this is a very roundabout. I don't want to necessarily tell you like, you know, buy this, but yeah, when it comes to crypto, like my firmest belief is in Ethereum. I think that it's been managed very, very well, and it's currently not as expensive as it used to be. So it may be a decent time to buy it, but yeah, it's very difficult to discern what the true value of something like this is, because there's so much speculation that goes on in it. And yeah. Anyway, Steve, go talk to my dad and find out how to get on a on Kraken or Gemini or something like that.
Okay, thanks.
Sure.
It's about 12:07 Central. We've run over a little bit, but great conversation. Anybody have any final questions for Jake before we sign off? And just to let you know, this has been recorded. So we will push this out to CORFAC Nation and for anybody who's interested. Mason, any final thoughts, comments?
No, as usual, this is a great program. Thank you for everybody for putting it on. Very informational and looking forward to the next one.
Well, thank you guys for having me. Appreciate
Thank
it.
you very much.
Yep. Excellent.
Thank you.
stuff.
Take care,
All right.
all. Hope to
Thank
see you in
you.
Vegas.
Yep.
Bye,
Absolutely.
everybody.